Hi everyone, welcome to the webinar. We're here with Mark Porter on motor finance leasing. So I think we'll just give it just maybe a few seconds just to see if we get a few more folks joining. So we'll just see, let's let people join. I think we'll start. So welcome everyone to the webinar. So today we've got a specialist drill down webinar today, talking a little bit about the specialists around the motor finance and leasing industry and collections, and really talking a bit about the next 12 months. And we've got some new data for you that we commissioned through YouGov, really just interviewing people really about what they kind of think a little bit about that. So I'm here today with Mark Porter, who's the head of collections at Motonovo Finance. So welcome, Mark. It's great to have you on board, and we'll be chatting throughout this and getting your reaction to it. I know you've seen some of the data too. So before we start, a little bit of housekeeping. So first off, so the panel members are visible, so you can see both Mark and myself, and they're audible. But the attendees can't be seen or heard. For us, I mean, it's the two of us having a conversation. That's fine. If everyone else, just make sure they stay on mute. We will be recording the session, but it won't be shared. So Chatham House rules will sort of apply. And if you want to interact as an attendee, then you can type within the moderator chat that's on the right of your screen. Use the moderator chat for technical issues. But if you've got any questions for Mark or myself, use the Q&A button, and what we'll do is we'll monitor that throughout the session, and hopefully we'll be able to answer any questions. Now, if we can't get to any of those questions, then what we do is we'll basically circulate some of those and try and answer them and send them to you together with the pack afterwards as well. So you should get all the information that hopefully you need. And of course, we're happy to have any kind of follow-up sessions with anyone on an individual basis. So please just reach out and contact us. You know where we are, and we're happy to arrange something and chat further individually. Also, throughout the session, we're launching some interactive polls. So please do get involved. Have a vote. We're asking some interesting questions, and again, we'll try and wrap those into the conversation too. So the agenda's on the screen now. And so first we're going to go through a little bit through the YouGov data and some of the summary findings that we had. Then we'll have a bit of a conversation, and then hopefully end up with some Q&A. So if we just go to the next slide, I'll just talk a little bit about the poll. About us actually. So it's myself. I'm on the left, and then Mark, who you can see live down below, say head of collections at Motor Finance. Yeah, thanks for giving us a wave, Mark. So go to the next slide. Let's talk a bit about the poll, the survey. So Arum had commissioned a survey with YouGov. So we did that at the start of October. It's about 2,000 adults that we surveyed. And really, we can sort of break that down by various sort of like drill downs within the data. But it was really some questions that we had really around, say, the motor finance, leasing and collections process. So if we go to the next slide, so just to run through that. So the first question was really around, what do you actually own a vehicle? Do you own a motorized vehicle? So that was against the full 2,000. Unsurprisingly, most people do, 68%. 30% of people don't. And I think when you break down the demographics, what was interesting is especially true in some of the older demographics. So it was over 75% of the older demographics, and then obviously under 25s, it was less than 25. So I don't think this is really any kind of surprise in terms of like the prevalence of vehicle ownership. I think one of the things that maybe we'll talk a bit about later is just what's happened with new car sales and how is that going to change going forward. We've seen rising demand, I think, in the second-hand car market. There's been some weakness in the new car sales. And how does that impact in terms of collections? So the second question then was then really around, so if you are a vehicle owner, did you purchase the vehicle through finance, and which type did you use? So 69% said people said they didn't purchase it through finance, and there's 12% on PCP plans and 8% on hire purchase. And when you break that down, looking through some of the demographic details, what was interesting was, definitely when you break it down by the number of children that people have, the more children they had, like greater than 2, greater than 3 children, there was definitely a prevalence to having more type of finance plans, so the percentage was higher. And if you had younger children, there was prevalence to having more financing, which kind of gels a little bit with people, needing I suppose needing larger cars, or needing finance to be able to buy those cars as well. There was also like a gender split as well. So definitely personal contract plans was the largest type, and men had a higher instance of basically using PCPs than women did. So it's 14% versus 10% of the female population, and it was almost like reversed on the higher purchase. On the higher purchase category, with women at 9% and men at 6%. So it seemed like there's a bit of a gender divide in terms of PCP plans versus HP plans. And I'm not sure quite why that is, if that goes down to maybe risk taking or those kind of things. So I thought that was quite an interesting split. If you go to the next slide, so the third question we asked was then just, how concerned are you that you'll be able to keep up with repayments? This is getting into the collections questions. And what we saw was there was about 15% of people were either very concerned or fairly concerned. And when you looked at the demographic splits, that changed quite substantially by age range. So that fairly concerned plus very concerned was actually, for the 18 to 24 age range, was 48% versus the 15% that we've got on average. And then unsurprisingly, I think for people who are unemployed, it was 53%. Now we have to be a little bit careful with some of these stats just because the sample size is quite low, but it definitely seemed like, I think the unemployed piece didn't seem that much of a surprise, but the younger age group definitely seemed sort of a bit of an outlier too. Other areas of concern seem to be, again, people with large families was at 44%, and it was also slightly higher in London and the east of England, just geographically as well. We just go to the slide number 4, question 4. So the fourth question we asked was, which bills do you prioritize over repayment of your car finance or lease deal? So is it, do I say my mortgage or rent is higher than my car finance, or my energy bill? What would I pay in preference to that? And so I think, again, keeping a roof over your head is pretty much, seems like that's pretty much up the top. Then with energy and sort of council tax, sort of, higher on average than your car finance, and then things like water, broadband, etc. further down. So I think this sort of largely equates to a payment hierarchy, and I think, again, when you look at some of the detailed splits, and maybe we'll chat a bit about this, Mark, later on, is you look at some of the younger people as an example. Younger people seem to value or payment over on mortgages at 57% versus the 70% overall. And some of the things like energy, credit cards, council tax, maybe some of the less exciting things that we have to pay, all were lower than what you saw on the overall population. It was lower for younger people. And they seem to have preference for things like communication. So internet was at 30% versus 17% on the survey on an average, and TV services at 40%, and mobile phones at 37%. And I kind of read into that a little bit around, you need a car to get to work, and you need things like internet, etc., to get to work. And there's, it's wrapped up into your socializing as well. So there's definitely that kind of age kind of split too. And when there were some segments within the population that said, my car payment is my number one priority above everything else. And that was the highest in the less than 24 age range, and that 35 to 44 age range. Again, in London, the east of England. I think some of that's got to do with getting to work. Maybe people need it as part of their jobs as well. Just go to page 5. So the fifth question was, imagine that you still had payments, but were not able to afford the monthly installments. Which of the following solutions would you like to be offered by your finance or lease providers? This was about, what type of payment arrangements or repayment schemes would you like to have? So we had 41% were reduced payment but extend the term of the finance. 14% said they don't know, and then it was repayment holiday with increased payment on recommencement, exchange of vehicle, settlement on refinance, or return the vehicle. And again, when we drill down into the detail a little bit, you can see that, things like return of vehicle in that 18 to 24 bracket was 20% versus 8%. So younger people seem to be much more likely to want to return the vehicle than, say, their peers in other age range. And I thought the middle age had a higher preference on the repayment holiday, so it's 24% versus 12%. And again, is this related to people with families, as an example, the fact they actually need the vehicle, whereas maybe younger people don't need the vehicle, they can use public transport, but if you've got a family, you've got to have it. So there's those kind of preferences that seem to be coming through. Just flip to the next page. So the sixth question is, well, let's say you've missed a payment, what's your likely action? What would you do? So 43% people would say, well, they'll contact their provider before a payment's missed. So they're being very proactive. 34% said they will basically wait until they've actually missed a payment, then they'll reach out to them. 10% said they'll wait for a reminder, so they'll wait for the reminder to come, from their lease provider or their finance provider before they actually do anything. And 3% of them actually said they'll wait for 2 or 3 reminders. They really need prompting. So overall, it was that proactive kind of range was sort of in the orbit, the proactively contacting people, contacting their finance provider before they get reached out to, was around about 77%, those top two lines. But again, in the younger demographics seem to it was at 24% versus that 3%. So 24% of the younger demographics, which was less than 24 or less, would actually wait for those 2 or 3 reminders until they actually reached out. So a little bit of sort of head in the sand, waiting to be told, that they need to make a payment, or ignoring it. And what was also interesting was that also seems to be in the older population. So it was 38% versus 34% wanted to wait until a payment was missed before contact. So they seem to kind of wait, and that proactive piece seemed to be sort of a little bit more in the middle. And just looking at the geographic, I think that the top geographic areas were Yorkshire and Humber, and Londoners at 19% were more like to wait, be contacted, than the rest of the country, which is at 13% on those 2%. So there's a little bit of geographic split there, not huge. And if we just go to the last question, which was number 7, the last question we asked was then really around, what's your preferred communication channel for discussing the issues with payments? So if you do have an issue. Telephone came out as the top at 64%. I mean, that was quite very much heavily so. And what was actually interesting was it was actually highest and higher in the older age range, but also the younger age demographic as well, at 70% as well. So it was definitely skewed at the younger group and the older group. Email and web chat definitely seem to be moving up. It was nice to see web chat sort of increasing. And the first appearance really for video calls, which I've never seen on the survey before, but it's at 5%, so I've not seen that before. So we can chat a little bit about what we think about that. This sort of middle age range of 25 to 44 had a higher preference for web chat and a lower preference for letters. Is this because maybe they're busy, they don't have time to talk to people on the phone, and so they need these sort of more sort of hands-off type of interactions in order to sort out their financial dealings. So that seemed to be skewed and sort of as opposite to the other age groups, almost like at the other ends as well. I think fairly unsurprisingly, against at least common thinking, is that retirees seem to dislike web chat more, probably a preference to telephone and letters in there, but they also liked email. So is email replacing letters, as an example, with older segments at 52%, and then also with students as well. So they obviously they're busy too, but they also like email. That was at 86%. We got some interesting data, and I think some of the splits was kind of interesting as you sort of break it down. I think so I think Mark, I mean, and I don't know if it's worth actually just putting up the first poll question. So we've got some poll questions just while we're chatting. So if we just put that up first, and then we'll chat a little bit, Mark, about what you thought. So the first poll question is just how much have customers been impacted by COVID with an impact on collections, and generally, what are the audience kind of hearing? So I think that we'll put that up just while we're chatting. But just going back to the survey, I suppose. So, Mark, I mean, I know we sent you a copy of the data as well. I mean, what were your kind of thoughts, really?
Well, things that stood out to me, the first is, of course, collections is as good as the data you have, and then how that data feeds into smart communication strategies. So I found the communication preferences quite interesting. I was quite surprised, I've got to say, that telephone was up there at 64%. The reason I was surprised a little bit by that as a preference, and I did wonder how much of this data was a reflection of how collections do communicate rather than how we should communicate. The world is changing pretty rapidly, and I think that certainly when I look at outbound telephony, we're seeing right party contact rates when we do outbound dialer in single digits, and I think that's probably reflected across the wider industry. Outbound dialing is intrusive. You're trying to get data to drive it in a smarter way, but it's still quite a labour-intensive way of contacting customers. And then, of course, when we talk about telephone, a lot of that inbound traffic, it's very challenging to sort of separate the different channels. Quite often, the communication with the customer is driven by multiple channels being utilised. And what I mean by that is some of the inbound traffic, of course, is driven by text messages going out, letters going out, emails going out, and then the customer will ring in off the back of it. The one that did I find interesting, you touched on there, was video conferencing. And we at Motonovo don't do video conferencing, video discussions, and that's definitely, I think, a reflection of the COVID world in which we live in. I mean, we're talking by video now, and I can see some real value there, especially with vulnerable customers, in actually having a face-to-face conversation. I'm not sure though, and it'll be, whether the staff collectors would like being on video calls. You've got the human side of this world in which we live in. You're on mute, or the screen's freezing while you're having conversations, and a dog's barking in the background, and children, etc. Which I guess maybe that's why video calls have landed on the list, because we've now become a lot more comfortable with dogs barking in the background and children running around. But I think when we're having difficult conversations with customers, I think we'd need to be thoughtful around video calls. But I could see some real potential there, something to think about, certainly in the vulnerable customer space, where maybe an eye-to-eye human conversation is good. And it sort of links to another thing, which I think I'm throwing stuff. Yeah, another thing you referenced there was around priority order. And I think it was interesting, the point you made about things like internet. And I think this COVID world in which we're in, with so many of us working at home, and I think most people are of the opinion that working from home is going to be a significant part of our lives post-COVID, because it's proven the concept. You could see that the internet is going to be pretty high up in people's priorities, and probably increasingly so in the future as the working world changes. And I think the other thing, when we come to talk about motor finance, which is a consideration in COVID, is that you've got a health element to this as well. I think that not only have people, of course, seen the car as important for getting to work, which maybe will become less so in the future with more people working from home, but people still use the car to do their shopping, to take children to school. It's a key part of their life. But I do wonder, with the COVID situation, there's a resistance or reluctance to go onto public transport. So you could see from a health point of view why cars might also rise up rise up people's hierarchy of importance when they start considering the health implications, positives of having a vehicle, and keeping ownership of a vehicle stops you having to go on to public transport. So certainly some interesting data there which we can explore today.
Yeah, I thought the second-hand car market was quite interesting, because almost like when COVID first started, like everything in the world stopped, didn't it? And certainly there's a lot of sort of like received wisdom. Well, this is going to sort of suppress volumes as it goes through, but actually that doesn't seem to have happened. And I think some of the thinking I was hearing was very much for that, which is, well, people have been going out and buying cars, and cheaper cars and second-hand cars, because they need to get to work, and they're kind of scared of going on public transport, right? Which is kind of it's almost like the reverse of what you might intuitively think, but it kind of makes sense.
What we've seen through the auctions in recent months, since we've
Mm,
come out of lockdown, is some robust pricing. Some. I
mm,
think there's been some pent up demand for sure. We are, however, starting to see some early signs of pressure out in the market. And there's some horizon risks to keep in mind when we're talking about vehicle sales and second hand pricing. One, of course, is this situation we're in where there's localized lockdowns. I'm
mm,
speaking to you from Cardiff today, and we've of course got a full lockdown in Wales kicking in this coming Friday.
mm,
So that of course has a significant economic impact. Dealers are closed from Friday in Wales, so that's
mm,
certainly going to have an impact on vehicle sales. We've got tier 2 and tier 3 shutdowns in other parts of the UK, but also in terms of horizon risks, I think that the end of the job retention scheme at the end of this month, I think, is going to have an impact on consumer confidence. And we've got the job support scheme replacing it, but we all know that doesn't cover everybody that would have been able to claim
all,
when
isn't it?
furloughed. Brexit, of course, has sort of dropped a little bit off the radar in recent months with COVID, but it's back slap bang on the radar again now. We're heading very rapidly towards a no-deal scenario, and so there's an unknown there, a question mark about what that means for the economy, but also, again, consumer confidence levels. And so we're starting to see some of that move into the pricing now that the pent-up demand post-lockdown is starting to reduce. And so it's
Mm,
certainly one to watch, but there are some horizon risks out there for sure on the collections front. And I think
mm,
at the moment, the hardest thing, certainly not just in terms of vehicle pricing, but when we're dealing with customers, often in collections, if we go back before COVID, you'd be dealing with often a life event. I've lost my job, my marriage has broken down, I'm going through a divorce, etc. And then you work with the customer with a clear path to try and get them back on track. Or sometimes recovery of the vehicle is also the fairest outcome. What we're dealing with at the moment isn't like that. It's a situation where you can have somebody on a payment deferral in line with the FCA guidelines. They come off that payment deferral and you agree a solution path. And then you get a situation like in Wales where there's a national lockdown and they're back wanting forbearance again. And we need to assess affordability and sustainability when we're looking at solutions for the customer. But it's very difficult to assess sustainability when the situation is so unknown and is changing so rapidly. And I think this devolved government approach to the COVID situation is really added some complexity when we're talking to customers. This localized approach means that we've got different levels of impact in different parts of the UK. And
mm,
when we're having conversations, we're also mindful that there are sectors of the economy, the obvious ones, travel, hospitality, that are impacted to a greater degree than other sectors. So we're starting to look at what we can do around smart outreach. Can we start from a pre-delinquency perspective, reaching out to those sectors earlier, where we monitor for companies that are making redundancies, so we proactively reach out before people have gone into arrears. But it's a very fast-moving situation. And I think that when you look at unemployment levels on an upward trend, you referenced there some of the concerns around payments, and you said 15% of people were concerned about their future payments, and that was maybe not surprisingly higher with younger people. Younger people, I think, on the job market are really feeling the brunt of this, taking the brunt of this impact from
that's a
COVID,
fair point.
and
Yeah.
and and it does make you think a little bit about how do we support those people, because we're very sensitive to the fact that people need a vehicle. It's often if not their biggest after their mortgage, it's right up there in terms of sort of asset value for people. It's critical for their life for the reasons we spoke about: getting to work, going to the school, etc.,
Mm,
etc. How do we support customers through a situation which could go on for a very long period of time? Because the other consideration, looping back to your point about pricing, from a fairness perspective, is motor finance is dealing with an asset which is generally depreciating in value. So we're also mindful of the fact that we want to allow forbearance, we want to help people. We certainly don't want to be in a situation where we recover vehicles and force people onto public transport in the middle of a global pandemic. But at the moment, when we're talking to a lot of customers, the path to getting back on track is unclear. for us as a lender and for them as customers. And so it does create some operational challenges, because historically the FCA have spoken about too much forbearance being as bad as too little. We don't want to be ruthless as lenders, but equally we don't want to allow customers to get behind deeper and deeper with payments.
It's just
And I
been
think
the
the other
Goldilocks zone, doesn't it?
it has, yeah, and I think that the other consideration for us, of course, is the motor finance agreements. Certainly, when you compare them to something like a mortgage, you're dealing with significantly shorter loan terms. So when somebody goes behind with their payments, you could be talking about extending the term of the agreements, essentially, with an asset that's depreciating in value, and the customer's still going to be paying beyond the original agreed term. And look, it's right to help customers, and I think that it's fair to say that the collection sector, I think, has really stepped up and reacted and taken on board regulatory steer, has helped customers. But we also have, I think, as a horizon risk, and it's difficult to sort of measure this at the moment. The FCA guidance around repossession activity for COVID comes to an end on the 31st. So come November, if it's the right thing to do, lenders can restart activity, repossession, issuing instructions to get a return of goods order. And I think lenders are mindful of their responsibilities to allow forbearance and help customers, but also mindful of, yeah, it's a balance. And I think in practice, because this is a very fluid situation, not an easy balance to achieve. It's very difficult for collections departments when you get down to conversations with individual customers. That line between too much forbearance and too little, doing the right thing, acting in the customer's best interests. At the moment, it's very difficult to assess what's in the customer's best interests longer term, because this situation hasn't yet resolved itself. So difficult times, for sure.
Yeah. So just looking at the poll here, I mean, we got 68% of people said it was how people reacted to collections during COVID. It was 30 differently. Seems about 68% seems to be around. So it seems like there's some some change, but not super change. And I think there's that segmented kind of change. And we just while we're chatting, just quickly put up the next one. And you talk a bit about volumes and the furlough scheme coming to end. The next poll was just really around. Interesting to see what the audience is thinking. So, like, when will that delinquency hit? And when will we start to see that coming through? And I think certainly with furlough schemes, it's sort of like it's been sort of, some of this stuff has been delayed, right, to a certain extent in a lot of places. So we need to see what people think on that. But I suppose, just going back to touching on some of the things you're thinking about, you were talking about. So segmentation, right? And we've seen it some of the data that we've seen as well, some of the ONS data, in terms of, like, it's very much is different by where you work, right? So if you work in the retail sector, accommodation, it's been events, it's been brutal, right? And that's been a really tough industry to work in sort of travel. However, you got the other end of it, which was like public sector, where they've got fairly secure jobs. Even financial services seems to be relatively more stable, and it's almost like the population's been cut in a different way than the way we would do it before. And then we've got this survey here, which is then talking about age demographics, and it's almost like everything's kind of changed. I mean, how are you sort of thinking about segmentation, really? I mean, do we need to rethink everything, or?
Yeah, and it's a good point you raise. And again, I respond with the caution that this situation is still playing out, and we need to be open to the fact that at the moment, you're right, a lot of the impact has been on sectors like hospitality, travel, etc. We're also seeing a lot of customers that maybe live hand to mouth. People like taxi drivers, etc., where if you're not working, you're not earning. The other challenge, and I think this is where the furlough scheme is an interesting consideration. The difficulty is some of these jobs would not have existed. They would have lost their jobs. They wouldn't have had income if it hadn't been for the furlough scheme. And it'll be interesting to see how many of these people that continue to be furloughed are able to take advantage of the job support scheme that replaces the job retention scheme. And the general expectation at the moment is that we're going to see continued upward trend line for unemployment levels. And we're already seeing a lot of these people in hospitality and travel, etc., looking at other sectors of employment.
mm,
So I think that when we come out of this, the economy is going to be in a different place. And I think when you look at sectors, and I'm no expert on, for example, the airline industry, but
mm,
when you read all the press reports, you're talking about multiple years after COVID for the airline industry to recover, if it ever gets back to where it was pre-COVID. And so we really need to, and this comes back to my point about when you're talking to customers and you're trying to agree a solution path for them. At the moment, when you're having this conversation, customers are saying, I don't know what the future holds. I don't know what's
mm,
going to happen. And I think that the government, the fact that, again, you've got different levels of support. So with the Welsh government decision to lock us down, the Welsh government have come up with a support package of around 300 million. And that includes payments to businesses, etc. But that's a different approach to the rest of the UK.
mm,
So when we're talking to customers, you've got geographic differences in the support that they can access. But I do think, and to echo, I guess, the regulatory point, it's really important, arguably more so than ever before, because of the complexity of the situation, that we're actively signposting customers to get independent, holistic debt advice, to make sure as well that customers are really thoughtful around how they prioritise their debts. Because I do think as well that we have seen some customers who have used payment holidays and payment deferrals maybe as an opportunity, because of the uncertainty, to keep money in their pocket because it was there as an option rather than was needed. And we've seen quite a few customers, certainly as we came out of lockdown, pay off their payment deferral amounts, which sort of backs that up. But we're seeing a segment of customers, when you talk about segmentation, which is probably our biggest challenge we're finding. We've got a pool of customers who had a payment deferral and for whatever reason haven't re-engaged with us. And,
mm,
and and that's really difficult, because we can help people, we can offer them support, we want to help them. It's in our commercial interests as well as being regulatory and ethical drivers behind it. But there is a segment of customers who I think, maybe because of what you've described, certain sectors they work in, they don't know what the future holds, who are burying their head in the sand. And I think
mm,
the other sector, which we haven't really touched on yet, but we need to be mindful of, are vulnerable customers. The
mm,
FCA had a consultation on vulnerability which closed on the 30th of September. They've said they're going to be publishing some updated guidelines around vulnerable customer treatment in winter of this year, maybe into early next year. We're seeing, certainly at Motonovo, a significant uplift in the number of customers who are disclosing vulnerability, or we're identifying vulnerability through our conversations with them. And as this situation goes on, while it may not be the cause, it's certainly aggravating mental health issues. And I think we're starting to see, certainly as we enter into the winter, a little bit of COVID fatigue. And the end result of that is there are sectors of customers, cohorts of customers, who are responding to that maybe by not engaging, by burying their head. And I think that from an outreach perspective, we need to be thoughtful about how we get these customers to re-engage. And that's why I come back a little bit to some of your communication preferences and where customers see motor in their hierarchy of importance. We, like a lot of lenders, have a multi-channel approach, but I do think we need to start being a little bit more tailored, using the data that's available and maybe communicating with different segments of customers in a different way. The other
mm,
lesson I think that we've learned from a comms point of view through this journey is that I think in the early days of this, if I'm honest, our communication tone was a little bit aimed at people's heads rather than the heart. And what I mean by
mm,
that is it was very much, these are options available, these are the consequences. And again, our regulators encouraged us to be very transparent and present all of that information to customers so they can make an informed decision. However, this has been a very emotional situation for people. And if you look back at COVID and remember when we locked down in March, there were no government support schemes available. So we had a number of weeks where literally we locked down. There was no furlough scheme. There were no self-employed grants. People
particularly for you
literally
guys in motor
overnight.
finance, right?
Yeah, absolutely. I mean, we
You were
saw in
waiting,
that
right?
first week. Yeah, we had a month worth of calls in the last week of March, a month's worth of
Mm,
telephone calls. And it was people who didn't know what they were going to do. And again, the regulator hadn't published any guidance. at that point. As I mentioned, there were no government support schemes at that point. And whilst all of these schemes have come into play and have certainly helped significant numbers of customers, I think what it highlights is that customers have been on a really difficult journey here, are still on this journey, don't know where we're going to end up. There's a lot of uncertainty about people's job security. And I think that the whole consumer confidence piece, even if you work in a segment of the economy which is reasonably secured during a recession, this is a health emergency as well as an economic challenging period, recession. And I think that's creating a lot of unknowns for people. But I do think that we need to.
It just feels
Yeah, I
like
was just
everything's
going to say,
getting
I
more
think
complex,
yeah,
not less complex, right? And it's just as it goes on, and as we started out in the pandemic, it was, everyone thought, well, we're going to be there for 6 months. We've got these big schemes, and everything was fairly. I know we all had huge amounts of work just handling it, but as we sort of come out of it, there hasn't been any kind of end, right? And it's kind of like now it's just getting
yeah,
more complex, it's getting more fragmented. I
yeah.
think the lockdown fatigue is definitely, or the pandemic fatigue is definitely there, and I think it does start to impact
Yeah,
us, right? But we've got to get on with our
yeah,
lives, right? And so, that's
yeah,
impacting customers, I would think.
absolutely. And the other thing, of course, is where this situation has been unique is when you look at data that's available. I mean, one of the most richest sources of data, of course, for lenders is credit bureau data.
Mm.
But during the pandemic, if people have been on payment holidays, payment deferrals, and I think quite rightly so, that hasn't reflected on their credit file. Credit files have been reflected, although there's other ways of seeing what's gone on. But of course, when people come off in motor, they come off their payment deferrals up to 2 payment deferrals. If we offer them post-payment deferral forbearance, that will start registering and recording on their credit file from then onwards. But we've got to try and understand the financial impact on customers. And I think it's about encouraging those customers who are going through a very emotional situation here. Their jobs are at risk. They've got continued insecurity. It must be really difficult. For example, using my taxi driver example, if 1 minute you're out there and you're able to work again, and then the next minute you've got a situation like we have in Wales where you've got a full
You're back
national
into it again,
lockdown,
yeah,
and you're
yeah,
back into it again.
yeah.
And although it's for in Wales they use a 17-day lockdown. I think people are questioning whether or not it will be just 17 days. Could it go on longer? You're hearing scientists talk about multiple lockdowns. In England, Scotland, Northern Ireland's adopted a lockdown approach. Scotland and England are doing their own thing and they're looking at this tiered approach. But I think people are getting a little bit confused about the different rules. But it's sitting here today. The question is, what is the financial impact on you? What not just in the present, but looking forward. That's a really difficult conversation to have. And when you throw in the emotion of this situation, the fact that customers are scared, people don't know what's going to happen in the future, and other factors, as I mentioned, like Brexit, etc. There's some difficult times ahead. And I think we've
Mm.
also, in collections, got to think a little bit about our staff and the well-being side of things. We in collections have, and I think, again, it's universal across all product types in collections. We found ourselves, whether it's mortgages or motor finance, etc., dealing with an enormous spike in volume, much higher numbers of customers needing help, whether it be payment holidays, payment deferrals, etc. That has put an enormous amount of pressure on businesses and has tested our operational resilience, maybe in a way that it's never been tested before. And that's
Mm.
why I think when you look at the communication mediums, I mean, to give you an insight into how we responded at Motor Novo, we for us, digital was a game changer. We already had invested in a solution, a digital self-serve solution. We work in partnership with a company called Flexis, based out of Bristol, and we've built a digital solution where customers could complete an income expenditure form, a standard financial statement. It assesses their individual affordability, and it can offer solutions against that customer's individual circumstances. And we were able to create for customers, when payment deferrals came in, some payment deferral approval agreement journeys, digital journeys. Because one of the things that we found, coming back to the emotion point, was that customers were getting very frustrated that they couldn't get through the telephone. Their emails were not getting responded to. And again, that was echoed when you look at Twitter and Trustpilot, etc., across the industry. And when we turned on digital, the fact that customers could go on and get an immediate decision gave them that peace of mind. So for us, it was a game changer. And what it did was it reduced telephony pressure so that our agents could focus more on helping those customers, like vulnerable customers, that really did need to speak to somebody.
So
But
I just,
from an opposite,
I'll just go back to the survey around the telephony piece. And I think you made a good
yeah,
point right at the start, saying around, is it because of the way we do it? I mean, I'd counter that and say, well, is it because when customers are really in financial difficulty, or they're really having a hard time, or they're vulnerable, that's really what they go back to. And we always talk a little bit about, at the end of
yeah,
the day, having a human at the end of the phone is really what people want to get to. And does it
yeah,
reflect that? In terms of an
yeah,
interpretation of the question, as much as here's what the outbound contact channel is going to be, and the fact you need to have that human-to-human conversation, and particularly in the
yeah, yeah,
COVID pandemic,
yeah, yeah.
you want to have that human understanding because it's an emotional piece, and collections is emotional as well, often as well. But
It
it
is,
is
it
that
is.
emotional
Yeah.
piece. Does it reflect that?
Yeah, I think it possibly does. I mean, we found, like I
Mm,
say, I think in the early days, especially, customers, when they didn't know what was happening, there weren't these
mm,
government schemes. And even when the FCA came out and there was a lot of press coverage around things like payment deferrals, they didn't want us to overcomplicate this. They just wanted a decision. Give me some time. And at that point, remember, we thought that this wasn't going to go on for a long time. We thought that these lockdowns would get us
mm.
back on track and would be
It'll be a
fine.
few months,
We
it'll be
sort of
over.
be a few months to be over, and then the government
Yeah.
did its eat out, so we're all eating out at restaurants, etc. And we thought we thought it wouldn't last as long as it had. And I think that when I look at the emotion, initially it was, look, don't put hurdles in the way, help me get a payment deferral, give me that peace of mind. And I think you're right. I think that lenders got overwhelmed by the volume, which added to the emotion of the situation, because I think I put myself in the customer's shoes. You've got no income. You don't know what's happening. You overnight, your situation has changed. You've got to put food on the table. You've got bills to pay. You're trying to ring through to sort it out, and the phone lines are busy.
Mm,
And this again was across the industry. And those lenders, I think, have invested in new technology, were in a better position, is my opinion.
mm,
I think that I take your point. I think that when I look at the digital journeys, we found that when that went live and customers could self-serve, the other thing is we're in a 24/7 world. Customers want to be able to ring through or go online at a time that suits them and their life situation. And so what we did was, by creating the digital journey, we created a 24/7 collections window. Customers could engage at a time that suited them. They could get an immediate decision. If it fell outside of our rule set, it went through to a human being in our electronic comms team who could review the situation and respond. But your point about the emotion, for those customers that needed to have a conversation, the primary challenge for collections departments was, how do we free up our phone lines? And so we, like many other lenders, we bought staff from the wider business. I mean, we at Motor Nova brought 150 people from the wider business in to help collections in those early days while we adapted our digital solution. But once our digital solution kicked in and went live, we signposted it through text messaging, one-way SMS, two-way SMS, two-way secured messaging, email, online FAQs. We found that digital became the customer's preference. And I think from our vulnerable team that saw a doubling in vulnerable customer numbers, they especially were freed up to have more in-depth conversations. But I think it's been easier since that initial spike, because we've been able to deal with customers on a one-to-one level. We've been able to capacity plan. But I do think for lenders, Motor Nova included, the operational resilience piece is really key here. This isn't over. We've still got an uncertain period ahead, with the need to provide continued forbearance, Brexit, global
So
recession.
let's just talk a bit about, so it's the future. And before we go there, let's just go back to the poll in terms of
Yeah,
when do people expect the delinquency volumes to hit? So it looks like that's moved. I think there was a lot of discussion around it being now, and I think there's been some indication about maybe it's sort of starting now, but the consensus seems to be in the December-January period. And a
yeah.
question I just had really briefly, the question is, do you think that the new government scheme is going to sort of like edge that out? Do you think it's edging that out a little bit than it was before? And do you think that's reflected in the poll? And then we'll talk a bit about
Yeah, and
the future.
Yeah, I think so. And I think we still need to wait and see what value the new government scheme has, whether it does slow
Mm.
down unemployment levels. But again, unemployment levels are going to continue. And I think one of the weaknesses in the job support scheme are things like, and I'm no expert on this, so I'm believing it's like you have to be working, is it 33% of your time to be eligible? So if you work in a sector where you can't operate at all, and we've got people like nightclubs as an example, where they're not able to open at all. This new scheme doesn't seem to help everybody. And I think there's people who are falling through the gaps between these various schemes. And I think
Rather
what
than
we're
fixing
seeing,
it, it's gonna just sort of it's gonna gradually moderate it, right? So we're still going to see an increase, but maybe it stretches it out a little bit further. So it's not a big,
yeah,
sharp impact on delinquencies.
yeah,
I'm
yeah,
just conscious of time. I'm conscious of time, Mark, and I just want to talk a bit about the future. And there's a couple of questions there. Just
yeah,
maybe just put the next poll question up just while we're doing this, because there's a couple of questions there
yeah.
around segmentation and around voluntary surrender areas. So is there any kind of like or I suppose segmentation variables that maybe you need to think of that we didn't have before? I think we talked a little bit about age. I think we talked a little bit about contact preference, but are there any others that sort of spring
Well,
to mind?
Well, I mean, it's interesting when you're talking about things like solutions like voluntary termination, voluntary surrender.
Mm, mm,
We've got to act in the customer's best interest, and there are going to be points where, when we have a discussion with a customer, especially when we start focusing on sustainability in their position, we've got to ask ourselves the question: will continued forbearance help or worsen? We've got to act in the
yeah,
customer's best interest, and
the contact.
one of these metrics that is moving, and I don't think, because we know clearly yet where it's going, is vehicle prices. And I've
Mm,
mentioned that come November, recovery action can commence if that's appropriate to do so. It'll be interesting to see how different lenders react to that and what they do. What we don't want is lenders, and I don't think it will happen, is going out there en masse and starting to repossess vehicles. I don't think lenders would do that because it doesn't make commercial sense. But there are going to be customers where going and recovering the vehicle would be the right thing. And so we need to keep in mind that stock dumping is not a good thing, and we don't want to go out there and overload the auctions. The stock goes up, but demand and purchasing goes down. But
how do you
when we're
think that's going to
talking to
affect
customers,
business models? How do you think it's going to affect business models? I mean, because so wild changes in vehicle prices are never good for things like, particularly things like PC, like resale
no,
values and those kind of things. That's an edge risk I would have thought in terms of like what's going to
yeah,
happen. That could fundamentally change some of the industry.
yeah, absolutely. And again, I caution that this situation hasn't fully played out yet. So I think there's a lot of
Mm,
unknowns and question marks. But when we're talking to customers in collections, we need to give the customer the information they need to make an informed decision.
mm,
And certainly if you're talking about something like voluntary termination, that can be for some customers the right thing to do, the correct way to go. But you want the customer to understand their liability position, etc., etc. The same with voluntary surrender. And I think that certainly when you're having these conversations, having that information at hand, understanding what's going on in the wider world, being able to support the customer. But this line between forbearance and other options like privately selling the vehicle, voluntary surrendering the vehicle, it's very, very difficult at the moment because of this situation, as I keep saying, is geographically very varied. When you look at sectors of the economy, it's very different. These government schemes, are they simply delaying the inevitable? These jobs are going to go, we're just delaying that. Or are they actually supporting and helping people to come through this and then recover their businesses at the end? And
yes.
that's an assessment which in collections departments is quite a challenging conversation to have. And the other thing we need to keep in mind is, of course, you've got a segment of customers where there's an optimism. My business is viable, everything's good. I just need to get through this, and then I can
It
get back
really
on
is
my
tougher.
feet. But it's difficult to know where the economy will be with
Mm.
a global recession, ongoing COVID situation, Brexit perhaps thrown in, where it will be, for example, this time next year. And so for collections departments, that is the primary challenge at the moment. How do we help customers, but also think commercially around making the right decisions? And
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 when you
and,
go
and the lack of,
when you
sorry,
go
go
back to
ahead.
somewhere like 20, 30, maybe not 30 years, you think about the way collections used to be, right? And it was very sort of like
Yeah,
monolithic, and we didn't have the same segmentations, and we used to put in
Yeah,
segmentation sort of high, medium, low, or different types of segmentation. We've been on this sort of journey over time around having more and
yeah,
more different sort of intelligence at how we deal with it. But
yeah,
hearing you talking there, it's almost like this piece here is almost like further enhance the need for like even finer segmentation, where you're almost like getting
yeah,
down to
yeah,
that goal of like customer treatment, right? Individual customer treatment.
yeah,
We talk about this
absolutely.
segmentation of one, right? So, and
Yeah,
it's like how do you deal with customers and individual in a way that's controllable and makes sense from a business point of view? And
yeah,
that's what I'm hearing really as being sort of the challenge around
yeah, absolutely.
flexibility. I mean, because it's different. I mean, it's different by geographic region, by sector you
Yeah,
work in, by age range, as we've seen, all of these things, right?
yeah. And what you're describing is the collection's holy grail. We want to get to a point where we're creating strategies, outreach strategies, where we're
Mm,
looking, yeah, absolutely, geographic location, age base, communication preferences, etc., employment segments. To really, really start targeting not only the medium communication that's used, but the content of that communication and the solutions that perhaps we offer. And it's going to be interesting. But as going back to your survey where we spoke about like things like video calls, and I've referenced things like
mm,
digital collections departments, if I can be a little bit critical of our segment of financial services, have maybe been a little bit slower than the likes of customer services and sales departments in embracing new ways of working. And I think what COVID has done is we talk about home working. It's pushed, I think, lots of segments of the economy into something which we've always known was possible, but we've just been a bit slow to embrace. But how we speak to our customers, how we engage with them in the future, AI, bots, digital solutions, etc., are all things that collections departments are really speaking about now, because we know that we've got a difficult period ahead with a recession, and we need to be as accessible as possible to our customers, and also, from a point of view of making informed decisions when we're talking to somebody, we need to present our agents with the data, the information they need to actively help the customer. So I do think things like video calls, digital bots, will certainly increase in usage. And I think for a lot of collections departments, if I can be slightly critical as well, I think they've maybe caught with their pants down a little bit by COVID. That their model was primarily telephone and email, maybe with a little bit of text messaging thrown in. I think what it's shown is that electronic communications, you reference things like web chat, we spoke about two-way SMS, etc., are really powerful as we go through this difficult period. But I think collections
and
departments are looking at their segmentation, looking at their data quality, looking at how they can work smarter, get more out of what they've got, and embrace technology and systems to deliver better results. And
and what
evidence, of course.
what was the saying was the future's already here. We haven't just yet noticed it yet. So it's kind of like a lot of these
Yeah,
things have been that, and I think a lot of these
yeah,
communication technologies and the segmentation, the ability to be able to manipulate data and use it in things like models has been here for a long time. And
it has.
and credit risk was one of
Yeah,
the first areas to really look at modeling and some of those kind of things. It's just I think what's interesting
yeah,
with COVID, it's almost like it's given us the catalyst to be able to try these things, and like customers did it,
yes.
even us. We talked a bit about video calls. I didn't like being on video, but now I'm sort of
No,
like
I don't.
I'm used to it now. We're used to it now, right?
Yeah,
And
yeah, we are.
is that a fundamental shift that's kind of changing, right? So
Yeah,
I
yeah.
mean, it's got to the
I
point
think
now where I
COVID.
have to get dressed up, because I'm on video calls all the time. So,
I know you
so
brush your hair and look
yeah,
presentable, but
exactly.
you're right. I think COVID has already changed our world. Went through home working, communication. I think the modelling point, you're absolutely right. Modelling is going to have to move to the next level now and be even
Mm,
more granular. And I think that it's changed the world. I don't think we'll ever go backwards now. I think that we'll all be washing our hands for sure and gelling up, and
mm,
video, Zoom and WebEx, etc. Teams will be a normal part of business, and we will be working more from home post COVID as well. And I
yeah.
think that we need to start thinking a little bit about how collections departments remain resilient, how we support our staff well-being, how we deliver customers, give them what they need. And I think that it's pushed collections departments maybe to start thinking about things, and maybe knocked us a little bit out of our complacency.
Yeah,
Letters
yeah,
and telephone have a role to play for sure, but you need to have different types of communication medium available, and you need to invest in the future and have a strategy for how you're going to keep collections
Yeah.
departments. And I do think, as a, you know, and I'm conscious of time, but I think collections departments, this takes a lot of investment, everything we're talking about now. And I think collections departments in a lot of businesses find it easier to get investment when you see provisioning challenges and you're in a recession. But you really want to fix the roof when the sun's shining. But while we're in the storm now, start investing and thinking about the future. And I think certainly from a Motor Novo perspective, I'm pleased that we invested in digital because it has been a game changer for us. But we're not complacent. We need to do a lot more. And I'm going to go away
Yeah.
and talk about video calls with my teams now.
Well,
Get
I
get
think,
them on the video.
but I think the investment piece has been it's been quite nice in some of the collections departments because there has been money for investment now. I mean, the house
Yeah,
isn't falling in terms of like
yeah,
provisioning and losses. But I think if you're not investing in some of those things now, I think the fear is that it will, right? So I think it
yeah,
is now's a good time to invest, and it's a good thing from a customer point of view. I think customer expectations are changing. We're
yeah,
almost at
absolutely.
time, Mark. So I just go back to, I mean, so just the audience. I mean, it's 37% of people think it's digital collections journeys, but digital customer journeys and self-service is probably a top priority. And there's definitely obviously investments in things like collection systems as well. So I mean,
Yeah, yeah,
that really gelled to the collections, sort of the digital theme, I think, as well.
yeah,
Um,
absolutely.
so just on Q&A, I mean, we had a couple of questions really around segmentation, which I think we've answered. One last
Yeah,
question, which we'll just come back to in the Q&A and the answers after. We'll talk about it afterwards. Is do you think there should be some prerequisites before granting a payment deferral to a customer to prevent them taking out a finance agreement and requesting payment deferral almost immediately? So I suppose that's just so maybe we'll talk about that offline. We'll come back
yeah.
to the question just in the just out of the interest in time sort of directly in the Q&As afterwards, but we'll have that in mind. So Mark, thanks very much as always. Great to chat with you. I know you've got
Yeah,
tons of ideas, so I love chatting with you. It's great. So I hope everyone in the audience found this useful today. What we'll do is we'll send out a copy of the presentation, and you say just contact us if you want us to discuss any of it, any more detail. We are sending out a survey just as we close this to everyone who's been online here. So please provide your feedback as well. So I hope everyone's found this useful. Mark, it's been fantastic. Thanks very much. Love the discussion. It's great. There's really good stuff to talk about. So and thanks very much.
not at
Okay.
all. Thanks, everyone.
Okay.
Thank you. Bye.
Okay. Thanks everyone. Okay. Appreciate it. Thanks. Bye.